Greetings everyone, it's Michael Anastasiadis here from Bosanoff Mortgages. Mortgages Made Easy, coming to you live with your weekly mortgage and interest rate update. And just one slight little change since the OCR announcement yesterday. Yes, most of the banks have dropped their floating rates as expected. So that's the floating variable rates, offset rate, revolving credit facility rates. So they've dropped, and you'll be getting notification of that from your bank in the next few days. And so far only one bank has slightly dropped their 1-year rate, 18-month rate and 2-year rate from 4.77 to 4.75. So not much of a change there to report. So that's one bank so far, and we'll just wait now to see what the others do. Like I shared with you last week, ANZ moved early last week, and then all the other banks followed suit. So no other changes in the fixed rates yet. Now, one thing I can tell you all, that back when the Reserve Bank last did their monetary policy statement, they had an OCR bottoming out at 2.9 for next year. That's now been revised to 2.5 for next year. Now, whether or not they do 2 more cuts of 25 basis points this year, or 125 this year and 1 next year, we don't know. But the reason this is important is no one was expecting the Reserve Bank to change their forecast from a 2.9 OCR to a 2.5 OCR. So you can't tell me that future rates are going to have already been locked in. Rate cuts have already been locked in from the big banks, because that wasn't announced until yesterday. Now, the other thing that's interesting is the swap rates have also slightly gone down. So there is room for rates to drop a little bit more, but how much more, we don't really know. But we can expect rates to be coming down over the next, I would say, 6 to 12 months, and it could even be sooner, because, you know, as we hear with all these shops closing and businesses struggling, it's not pretty out there. And the cuts that have happened so far to half of the mortgages, that money hasn't flowed back into people's pockets to spend. Because I can tell you, a lot of my clients, they're keeping their mortgage repayments the same. Yes, they are going down onto a lower rate, but they're keeping their repayments the same so they can pay off the loan faster. So the loan term reduces. But yet, their other expenses, rates, insurance, cost of living, that's remained high. So money has been sucked out of the economy. So the Reserve Bank does have a little bit more to do to get people to have money back in their pocket, because everything else is so expensive. So if you've been one of those people that have kept your repayments the same, that's great, because your loan term would have been reduced. But there's some other people that have asked me to keep them to the minimum, because they need that money to keep ahead and keep afloat with what's going on. So until the economy starts doing something productive to grow our GDP, the Reserve Bank, there's only so much they can do. In terms of applications and people putting in offers on properties, so look, it's been pretty steady for us. We are still seeing a lot of activity from first home buyers, and that's increasing. So that tells me it's going to be a busy spring. And if you've been looking out there to buy now and going to the open homes, it's not going to surprise me in a few weeks' time. Once we hit September, October, November, you'll start seeing a lot more foot traffic at open homes on Sundays. Doesn't mean the prices are going to drastically go up, but all of a sudden, if there's more competition, it's going to be tough. And there's usually someone that's got more money than the other people. So until it's your turn, it might be a little bit hard. So what can you do? Make sure you're speaking to us. Make sure you've got the maximum pre-approval that you're comfortable with, and that you're within your limits whenever you're putting in an offer on your property, so you don't get disappointed. And like I say to my clients, you know, don't worry about the your maximum price. Focus on at what price are you happy for someone else to own the property, and be prepared to walk away and look at other properties as well, because there are still stock out there, good stock, and there's more stock coming on. So if only it was that easy, if everyone managed to buy their first home with their first offer that they put in. Wouldn't that be great? But it doesn't happen. Sometimes it happens on your second or third. Sometimes it can take up to 6 months of looking and us having to scramble to redo your application again, because usually they only last for 180 days, the pre-approvals. So it does happen, but it can take time. And make sure you've got your team on board with you as well. Your lawyer, your KiwiSaver sorted out, your builder's report, your builder's has been notified in advance, your conditions are sorted, and what I mean by conditions, I don't know if you have to close any credit cards or store cards, they're taken care of well in advance. So when it comes to putting in your offer, basically the bank's checking the sale and purchase agreement for the property, the disclosures on the property, that you can get insurance, and then that you're sticking within your pre-approved limits. Then pretty much, you can unless you've got that less than 20% deposit, in most cases, if you meet that criteria, you should be able to put in your offer without a finance condition, making your offer a lot more attractive to the vendors. Anyway, guys, that's what I'm going to share with you today. Yep, and I'll be coming to you live next week with another video, another topic. And as soon as I hear some breaking news of banks reducing their fixed rates, because let's be honest, changing it from 4.77 or 4.76 to 4.75 isn't, you're not going to be swapping banks for that. But as soon as I know that the fixed rates are dropping from the other banks, I'll be sharing that with you guys here. In the meantime, ka kite, God bless, and we'll be live with you soon next week. Cheers, guys.